Good morning and welcome to the trade setup right here on BQ Prime. I'm Neeraj Shah, and the global news flow is mixed. Our markets may be doing okay, the rest of the world markets may not be. So it's a bit of a mixed day today as we head into the weekend. It's a week that has seemed like having many weekends, by the way. But first, the global news flow. Amazon route sets up a retreat below the 1 trillion market value. That's quite something and quite a turnaround for the fortunes of both Mark Zuckerberg and Jeff Bezos, because Meta's route puts it on the brink of dropping from the top 20 US firms. Can you believe it? Fangs, when it was coined, these stocks could do no wrong. And suddenly, a turn of events, a turn of interest rates, and some maybe questionable decisions, especially in the past part of Meta, at least from a current perspective, seems to suggest that investors are losing patience with them. Elon Musk has formally taken over Twitter after months of litigation, and that's a big one. We also hear that the current CEO, Parag Agrawal, and a few others from Twitter's current management team are probably on the way out or have resigned, as per source-based information on Bloomberg. And treasury yields have fallen after GDP report shows some signs of inflation easing. So all's happening, isn't it? Let's take stock of the US markets. You will see why I'm saying all's happening, because Dow Jones did okay, but S&P did not, and essentially dragged down by the tech stocks. NASDAQ was down about 1.63%, but the yields will come up on your screen next. 3.93 if I'm not wrong. The US 10-year yield 3.91 in fact, so much lower than the scary 4.2% mark that we had seen. CBOE VIX steady at around that 27 mark, dollar index 110. So there's a bit of a retreat there, and which is why I think one of the reasons maybe why commodities did what they did yesterday and could well be in focus today. All the commodity stocks, by the way, steel was massively outperforming in trade yesterday. The SGX Nifty should come up on your screen next. Asia is a bit of a mixed bag, but the SGX Nifty is showing some more upbeat momentum. 60 odd points in the green, 17,863. So a day after expiry. And remember, expiry had a bit of a volatility. We came off and then bounced back very sharply. So it's pretty interesting what's happening with the NAR markets too. There's a bit of a strength there. Now, there's some key news just so that there's no confusion, because the news flashes that RBI has announced an additional meeting of the MPC on November 3rd. Now, we peel through the layers, my colleague Pallavi and Vishy, and here's what this is. Like, it's laid out. It's not that we've done some extraordinary research, but I'm just laying it out because that story's on our website to explain what's happening. But let me do it here as well. The meeting is to spell out the course of action by the central bank if it fails to meet the inflation target. And the RBI is required to submit a report to the central government for explaining the reasons for its failure to achieve the inflation target, the remedial actions proposed to be taken by the bank, and an estimate of the time period within which the inflation target shall be achieved. So it's more to do with the regulatory or necessary functioning that the RBI has to do, as opposed to maybe a key decision being taken. So just bear that in mind. No rumors needed for this. Okay, now what's the trade setup therefore for the day? There's a crucial support of 17,650, which was firmly safeguarded in yesterday's session, went down, as I said, and bounced back in the last 45 minutes to 1 hour of trade. The mid cap 100 outperformed the Nifty, but the Nifty small cap 100 underperformed, which is maybe from a small cap investor's perspective a bit of a worry. But remember, a bunch of results are dragging down the small cap space today too. We have a clutch of numbers which haven't quite done well, and remember, this is a lean earnings week, and next week is very, I mean, a bunch of results next week. But and despite that, the small cap 100 and a bunch of others are underperforming. IT took a knock post the US mega tech stock underperformance. Very likely that IT could continue to be under pressure simply because of what Amazon has done today too, or will do today in the US bourses. After hours trade suggests that, though Apple, I think, has done okay, but that's a bit of a relief. Otherwise, everything else has been taken to the cleaners. The stocks that I would watch out for on a bounce, which are on a recovery bounce, are city gas distribution stocks, and we spoke about these yesterday and day before, and metal stocks, which frankly I didn't envisage, but they've done really well. Also watch out for earnings today. Maruti, Reddy's, Tata Power, Vedanta, Bandhan Bank, some crucial earnings today. Large to mid-sized numbers coming out with numbers today, and therefore we'll watch out for all of those. Maruti in particular, numbers today, then the auto sales numbers start to come next week. So it's a busy next few days for autos and Maruti in particular. Maruti will come out during market hours. The other, but then maybe, but the others might come in post market hours. So bear that in mind. Okay. What about stocks to watch in the session today? A bunch of results to monitor. First, Indus Towers. Revenues up 16% at 7,967 crores, but EBITDA fell 23%. EBITDA margins at 35% versus 53%. What a crackdown on margins. Net profit fell 44% as a result. Now, remember, the EBITDA performance was highly subdued as it was impacted by a provisioning of 1770 crore rupees on doubtful receivables from one of the major clients. Now, no prizes for guessing this. The thing within the stars is that the current or the present is not looking all that great. If we were to survive, and I think there's a brokerage note from Reliance Securities which speaks about 2 or 3 factors why they still stay bullish on in the stars, and number of points, including receivables, including the survival of V, and all that could happen. So um, don't quite know, but I would reckon that even on a day like this, Indus Towers could have a meek start. So do watch out for Indus Towers today. Do watch out for SBI Cards. The numbers on the face of it, you might think a 27% jump in interest income or a 28% jump in net profit or asset quality improving is all great. JP Morgan has cut the target price though. Access Capital has cut the target price because they thought the numbers were slightly below what was estimated. So here's the Access Capital view, right? They're saying maintain and add, but the target price has been revised to 980 from 1040. They said the PAT is lower than expectations, primarily on higher provisions. They've reduced the FY23, FY25 PAT by 3 to 6%, factor in the lower NIMs. The new accounts volume led to about 17.6% growth in card in force, which is not bad. And spends were up 43%, resulting in higher fees, up about 30% YOY. So all those factors were okay. Asset quality was okay. NIMs and provisions were a bit of an issue, and that is what has led to not just Axis but a couple of other brokerages to lowering their target price as far as SBI Cards goes. Morgan Stanley says it's a muted quarter, but it's not as weak as it seems. They have an overweight rating with a target price of 1100. So multiple people slicing and dicing these numbers differently. Just on the back of the 2-3 notes that I have read, I would suspect that it's not a gung-ho quarter and therefore expect a muted start. Supreme Petchem could have a weak quarter. Revenue, I mean, it could have a weak start. Standalone numbers, revenues are up 4%. EBITDA fell 55% though. EBITDA margins at 6%. Net profit fell 53%. A bit of a worry here. Some other numbers include an Aditya Birla Sun Life AMC, wherein revenues fell 6% and EBITDA fell 8%, or C Infosystems or MapMyIndia, when revenues were strong at 76 versus 56 crores, but the PAT was flat. PNB Housing Finance seems to have turned out a good quarter. 2Q PAT was at 263 versus 233. Gross NPAs improved as well, which is actually a very positive sign. And while I haven't given the graphics here, the Morgan Stanley note suggests that it's a strong quarter and it's on a cusp of a turnaround. The new MD and CEO has charted a confident path. They have raised estimates for PNB Housing Finance, Morgan Stanley. It's an overweight rating with a target price of 570. They've raised the EPS estimates by 7% for FY24, 13% for FY25, and the price target by 14% to 570. So that's an interesting one for PNB Housing Finance. So do watch out for this one as well. Among strong numbers, by the way, since we started talking about strong numbers, ANUPAM RASAYAN I thought was decent. The one-offs, and I'll bring that up. But revenues are up 55%. EBITDA was up 63%. EBITDA margin at 27% versus 26%. So on all those counts, it was okay. Just that the net profit was not as buoyant, just about a 15% uptick. And I think that happened because there was higher interest cost and a negative other income. Maybe Forex loss, maybe something else. But the other income was negative, as a result of which, despite the fact that EBITDA and revenues were up 55% and or 63% and 55% respectively, the net profit number didn't look all that great. So that's and that that may make the stock numbers not all that great, but I would suspect that the market could be enthused by the EBITDA margin performance and the revenue performance. So watch out for this one. Lastly, Tata Chemicals. Not lastly, Tata Chemicals from a results perspective. Lastly, very strong quarter. Remember, 2 days or 3 days or maybe a week ago, we spoke about the Morgan Stanley note on Tata Chemicals, which suggested that they believe that the numbers will anyways be strong. And I think Tata Chemicals has done better than what most people anticipated. Revenues up 40%, EBITDA up 84%. Margins have expanded 500 basis points. There are very few chemical companies which have done this. Tata Chemicals is one amongst those. Net profit up 2.8x at 628 crores versus 221 crores. Quite something. Stunning performance, really. The stock has already had a bit of a reaction on that expectations, because most smart brokerages have put out the note and mentioned, if they covered Tata Chemicals, that is the stock that will do well. Just that it's beaten estimates, and therefore, on a buoyant market scenario, this could well turn out to be the stock of the day for the right reasons. On the upside, that is, I mean. Some other stocks included Dhanuka Agritech, which will consider a share buyback on November 21st, or Spandana Spurti, or a Vedanta. Kaveri Seeds is my mistake. It actually came in yesterday. But Vedanta, which gets about a 10-year extension from May 15. So there are 2 or 3 names that maybe you would want to watch out for. Ignore Kaveri Seeds. That's an error from my end. Now, price and volume action seen in some stocks. IFL Finance yesterday. Remember, we spoke about good numbers from IFL Finance, up 11.48%, volumes about 11 times 2-week average. Tata Motors DVR continues to ramp up, 5.43%, volumes 8 times. RBL Bank was active yesterday, 10% higher, volume 6.39 times. And Gland Pharma, 15% lower. Yes, we spoke about this likely to have been the stock of the day yesterday. I didn't anticipate 15% downtick. I did know that the stock would likely correct because Laurus missed revised guidance lower, did not miss out too much on the margin front, and Laurus was punished. Gland revised guidance and had a big miss on the margin front. So it was a no-brainer that will correct. Just the fact that I didn't expect to be down 14%. The fact that the Fosun, the parent company is also undergoing some stress, maybe only led to further outrage around Gland Pharma stock. So seriously corrected. Let's see if today there's a bit of a recovery for it, or does it continue to grind lower. Now, before we wrap up, what stood out for me, and I'm bringing you something from yesterday's Motilal Oswal note, sales note, but some of you may not know. So for anybody who didn't know this, I thought it was important. They did a Raipur channel check for the jewelry markets, and they said that jewelry market was in a festive mood, and they expected this Diwali to be the strongest in many years versus pre-COVID. Titan saw all 3 brands, all 3 formats, which is Tanishq, CaratLane, or Mia, also strong footfalls. There are 3 Tanishq stores, 1 Mia store, and 1 CaratLane store in Raipur, and all 3 apparently, all 5 saw some really strong footfalls. And the footfall in Kalyan Jewelers was relatively low, despite having only one large, they had 1 large store, but still the footfall was low, despite that, it's not like there were 5 stores and therefore the footfalls could have been distributed. There's 1 store, they apparently didn't see too much of in terms of footfall. So interesting read through about what happens to bullion sales and how strong Diwali would have been, and would it have a bearing on what a Titan or a Kalyan or any other jewelry maker might show up in the October, November, December quarter. Pretty interesting thoughts there. Nevertheless, that's the long and short of today's trade setup. Thanks so much for tuning in. Have a safe day ahead. Have a great weekend. And thanks so much for being with us today. And a bunch of conversations, of course, lined up today. Some on the IPO side as well. So you might want to tune in for some of those. And remember, viewers, last but not the least, before we wrap up, for all of you who invest in mutual funds, we've got a special Spaces session tonight. 3 advisors come in at 9 p.m. I'll probably do about 10 minutes of questioning. The remainder is left for anybody who comes in, logs in, and wants to ask a question around a mutual fund scheme to any of those three advisors, you can log in and try and ask whatever queries you may have. Thanks so much for tuning in today, and see you if I see you at 9 p.m. on Twitter Spaces.